Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty up 2% this week after a strong rally on Friday. The Nifty is now just over 2% away from its record highs. Crude oil prices are down 10% this week, the biggest 5-day decline in 2 years. JSW Paints set to acquire AKZO Nobel's India business by shelling out 9,400 crore rupees. The deal will make JSW the fourth largest player in the highly competitive paints industry. CNBC-TV18 reported last month that the deal will be signed by the end of June. Axis Bank executive Rajiv Anand leads the race to become the next CEO of IndusInd Bank. Sources say Anup Saha of Bajaj Finance and Rahul Shukla of HDFC Bank are also in the running. That's it exclusive. US and China agree on a trade deal framework. Beijing will allow rare earth exports after a review. US will ease the rules restricting high-tech exports to China.
But we're having some great deals. We have one coming up, maybe with India, very big one, where we're going to open up India.
President Trump teases a big trade deal with India ahead of the July 9 tariff deadline, but the Indian government sources tell us no consensus yet on steel, agriculture and automobile tariffs. India's chief negotiator Rajesh Agarwal is in the US for talks. The Union Cabinet is likely to have waived spectrum dues worth 6 lakh crore rupees. Sources say the waiver will only apply to government departments like Defence, Railways and Space. No waiver for PSUs and private players. Tata Power plans to expand electricity distribution across Maharashtra, seeks licenses across key regions, including parts of Mumbai, Pune and Nasik. Fintech unicorn Pine Labs files for an IPO worth 2,600 crore rupees. Existing investors include PayPal and MasterCard will offload stake as the company eyes a valuation of $6 billion. Well, let's go straight to the market action. Benchmark indices recording gains for the second straight week. The Sensex and the Nifty ended the week 2% higher. Broader markets outperformed with the Nifty small cap index up by 4%. So that's the Sensex for you, up by about 2% and a 2% gain coming in for the Nifty as well. The Nifty ending above 25,600 and it's now about 2% away from a record high. The Nifty Bank, meanwhile, also touching a fresh record high, closing above 57,400 for the first time. So strong close there for our markets this Friday afternoon. From equity markets to the commodity markets, prices of crude oil falling over 10% this week, registering the worst decline in over 2 years. Fears of supply disruptions in the Middle East have eased. However, oil prices markedly corrected today due to higher fuel demand in the US. But let's go straight to the big story. We told you first, and it is now official. JSW Paints is set to acquire AKZO Nobel's India business in a deal worth 9,400 crore rupees. The deal will make JSW the fourth largest player in the highly competitive paints industry. Shares of AKZO Nobel surging after JSW announced an open offer at a 16% premium. Rachna is here with more. Rachna.
It is a CNBC-TV18 News break confirmed. JSW Paints has officially sealed the deal to acquire a 74.76% stake in AKZO Nobel India. Now, this is for 9,400 crore rupees at 2,762 rupees per share. That's a 16% discount to market price, as we had indicated earlier. Now, sources have told CNBC-TV18 that the deal would be funded through two ways. First, where 2,000 crore rupees would be coming in equity from the Jindal family, backed by stake and asset sales, while the remaining 7,000 crore rupees will be in form of debt and structured credit, including financing from global institutions. But before the deal can go through, there are a few crucial steps left, starting with a mandatory open offer. Under SEBI rules, any acquirer picking up more than 25% stake in a listed company has to make an open offer to public shareholders. In this case, JSW Paints will offer to buy up to 26% more of AKZO Nobel India at 3,417 rupees per share. That's a significant premium to current market price. Now, post-merger, JSW Paints will have a production capacity between 4,70,000 to 5,20,000 KL per annum, blending JSW Paints' Vasind and Vijayanagar units with AKZO Nobel's plants in Gwalior, Bangalore, Mohali and Hyderabad. The employee headcount is also expected to be around 3,500 people and an estimated revenue of over 5,000 crore rupees in 2025. This is well in line with their FY26 growth targets. Now, with a 9 to 10% share in the decorative paints market and becoming the second largest in industrial coatings, this move makes JSW Paints the new number 4 player in India's paint landscape. A transformative step and a bold bet by Parth Jindal to build what he calls the paint company of the future. But it was earlier this year in Davos where he had said that he would do anything to get this deal. Here's what he said.
I think there's no choice. If JSW and the ambitions we've shown that we want to be a top 3 player in whichever sector we play in, if I have to do that, then I have to give it everything that I've got for AKZO.
How will you fund it?
It's going to be a mix of the family investing, and private equity.
Well, that's Parth Jindal speaking to me on going after AKZO Nobel, and today the deal has been closed. Now, paint stocks traded with gains after that announcement came in. How does all of this change the dynamics of the sector? Mangalam is standing by with the details. Mangalam, hugely competitive already with the entry of Birla and now JSW.
Let's start with, JSW Paints acquiring AKZO Nobel at close to around 2,700 rupees per share for the promoter stake. 3,417 rupees per share is what they've allowed for an open offer as well. But on AKZO Nobel, they're the 4th largest paint company in India. They're the makers of Dulux paints, and nearly 35% of their revenue comes in from decorative business as well. They have a high market share in the premium end of segment. Whereas JSW Paints, if you look at it, they've been in the market for over 6 years. FY24 is when they crossed that 2,000 crore revenue mark. FY25, they had a target of 3,000 crores, and FY26, 5,000 crores. All of this organically. Remember, 60% of their revenue comes in from intergroup business, so that's something we'll have to talk. If you look at the paint industry, the top 2 players have over 50% market share. Asian Paints last year did over 34,000 crores in terms of revenue. Berger, 11,500 crores. Kansai, 7,800 crores. AKZO Nobel stands in here. Add another 2,000 crores of JSW Paints, it becomes a 6,000 crore player on the whole. The paint industry worth nearly 80,000 crores right now. 65,000 crores is organized, expected to grow anywhere between 12 to 13%, with the market share of top 2 players being over 50%, and that's what the conglomerates are eyeing. What is it that helps in, the business to grow? Birla Opus launched last year itself. They have high single-digit market cap and market share rather, and 900 to 1,200 crore in terms of quarterly run rate. Can they continue this business or not? They have a stated target of 10,000 crores in terms of revenue and EBITDA break-even by year 3 of complete operations. What is it that the incumbents will need to do? Focus on distribution, brand, tinting machines, and capacity. Capacity, the least of them all. First 3 is most important. What everyone will be looking at, how the incumbents and disruptors expand, whether there would be margin contraction in the industry or not, and eventually valuation multiples. Are we likely to see another derating once this disruption comes by or not? All of that depends on what AKZO Nobel and JSW together do. We'll be tracking growth for JSW Paints along with AKZO Nobel, ex their own group, revenues. Secondly, how much more will they invest in capacity, branding, and distribution? And thirdly, from a listed company standpoint, will they list JSW Paints business via reverse merger, or will there be an IPO for JSW Paints itself or not? Paint stocks have seen a correction of almost 30-35% from the peak. Asian Paints at some point was trading over 60 times, now at 45 times. Berger Paints 40 times. So there has been one leg of valuation, multiple derating that has taken place.
Changes much, because these 2 players, as you rightly said, have been there in India already. Both JSW and AKZO have been operating in this market. We are more or less aware of their strengths and weaknesses, and we know what they are doing in the marketplace. So it's just a change of hands, possibly a change, in the management style that it is operating in. So from that perspective, there might be some small changes, but overall in the industry, nothing changes much. What does happen is that there is a consolidation which is happening now. So there are now 5 players in the industry. The top 2, Asian and Berger, remains. The 3rd, 4th, and 5th position is up for grabs, and that's where the competition will be intensifying a bit. Between Birla, JSW plus AKZO and Kansai.
Well, that's Berger Paints on the changes that we're seeing in India's paint market. On to a CNBC-TV18 exclusive. Axis Bank's Deputy Managing Director, Rajiv Anand, is a strong contender to take over as IndusInd Bank CEO. Sources tell us that two other finance executives are also in the reckoning. Ritu is here with more. Rajiv Anand, and who else, Ritu? The likely contenders to take over at IndusInd Bank.
Well, the big question for IndusInd Bank right now is who takes charge as the next CEO, someone who can clean up the books, restore trust and steady the ship after months of turmoil. And our sources tell us that the bank's board is actively considering three contenders, and that includes Rajiv Anand from Axis Bank, Anup Saha from Bajaj Finance and Rahul Shukla of HDFC Bank. Let's start with Rajiv Anand, who's got more than 35 years of experience. He's been with Axis since 2009 and served on the bank's board since 2013. And as the Deputy MD, he's led the wholesale and digital banking portfolio. But here's the key detail. Rajiv Anand has announced his retirement from Axis Bank and he's set to step down in early August, making him available to take charge at IndusInd if selected. Now, our sources point out he is indeed a strong contender for the job. Next up, Anup Saha, again 32 years of experience, 25 years in financial services, including 14 years at ICICI Bank. He's led everything from credit cards to mortgages, auto loans and structured finance. He's been with Bajaj Finance since 2017 and was very recently elevated to the position of MD. Finally, Rahul Shukla, more than 30 years of experience, began his career at Citibank and then joined HDFC Bank in 2018, where he oversaw corporate banking first and now heads the commercial and rural banking division, but is currently on a sabbatical. Now, while all three of these contenders are under consideration, our sources say the bank is looking more keenly at Rajiv Anand and Anup Saha. Now, remember, the Reserve Bank of India has asked the bank's board to submit the final list of names by end of June. Now, while the board has held informal discussions with RBI, we understand that the names have yet to be formally submitted. Now, typically, RBI takes anywhere between 4 to 8 weeks, sometimes even longer, to approve the bank CEO names. But in this case, it's not the usual case. We've seen a string of top-level exits, accounting lapses, irregularities come to light with a leadership vacuum at the moment. And so our sources indicate this appointment could be fast-tracked.
All right, Ritu, many thanks for joining us. The big global story: China has confirmed details of a trade framework with the US that seeks to allow rare earth exports and the easing of tech restrictions by the US. Beijing says it will allow the export of rare earth magnets to the US after review. On the other hand, the US will cancel a range of existing restrictive measures imposed against Beijing, including tech exports. With this, both nations have agreed to implement the framework that they agreed to in Geneva a couple of months ago. President Trump confirmed the agreement with China. He also teased a big trade deal with India, which he claimed will open up the country. All of this comes ahead of the July 9 deadline, when the 26% reciprocal tariffs are scheduled to kick in.
But we're not going to make deals with everybody. Some we're just going to send them a letter, say, thank you very much. You're going to pay 25, 35, 45%. That's the easy way to do it. And my people don't want to do it that way. They want to do some of it, but they want to make more deals than I would do. But we're having some great deals. We have one coming up, maybe with India, very big one, where we're going to open up India. In the China deal, we're starting to open up China, things that never really could have happened. And the relationship with every country has been very good.
Well, that's Donald Trump. Even as the US president teases a big trade deal with India, government sources say some hurdles remain. There is no consensus yet on steel, agriculture and automobile tariffs. Parikshit is standing by with the details. Parikshit, India's chief negotiator, currently in the US. The 9th July deadline looms large. What's the latest now on the talks?
India and US are discussing an early harvest deal which will cover $100 to $150 billion worth of goods traded between the two nations. But there is no agreement on critical areas just yet, and India's top negotiator, Rajesh Agarwal, is visiting United States again for talks. India and the United States are yet to come to an agreement on steel, agriculture and automobile tariffs. Sources say the US-India early harvest deal cannot and won't be a one-way street because both sides will have to win. Where are things stuck? Well, India wants an exemption from 50% duty on steel imports imposed by the United States. But America is unlikely to give a concession to India here. Differences still remain on tariffs on automobile components. Also, US wants access not just for American cars, but large, heavy-duty trucks as well. US wants more access in agriculture and dairy, but India cannot allow US dairy and meat products as American farmers use blood meal as food supplement for livestock. India is also unlikely to allow any genetically modified crops into the country. The US is likely to maintain a 10% baseline tariff on Indian exports even if a deal happens. And if that is the scenario, India would impose a 10% tariff on American goods as well. India also wants tariffs on labor-intensive products to be reduced to zero. Government sources believe that there will be at least 100 product lines where tariffs may be reduced to low single digits or even zero. United States may impose zero tariffs on imports of some labor-intensive goods from India. This may be through a fixed quota of goods to be imported at lower tariffs and anything beyond that to be subjected to higher tariffs. US and India are looking to conclude an early trade deal before the 9th of July. Indian officials have said that there will be no compromise on national interest and the country is not desperate for a trade deal. Experts have said that India should not be worried about reciprocal tariffs in case a deal is not struck before the 9th of July.
All right, many thanks, Parikshit. Now, the White House has indicated that President Trump could extend the July 9 tariff deadline. Press Secretary Karen Levitt said the date is not critical and could be extended at the president's discretion.
The deadline is not critical. The president can simply provide these countries with a deal if they refuse to make us one by the deadline, and that means the president can pick a reciprocal tariff rate that he believes is advantageous for the United States and for the American worker, and he will continue to do that.
Well, while the press secretary hinted at an extension, U.S. Commerce Secretary Howard Lutnick insisted that July 9th will be the deadline for reciprocal tariffs to kick in. So mixed messages coming in from the White House. Now, the U.S. Embassy in India has cautioned visa applicants against omitting social media information, saying it could lead to visa denial and future ineligibility. Now, social media posts by the embassy reminded visa applicants that they have to list their social media handles used in the last 5 years. The U.S. State Department has referred to each visa adjudication as a national security decision. Applications for students and exchange visas have also been asked to make their social media profiles public for vetting. The Union Cabinet is likely to have waived spectrum dues worth 6 lakh crore rupees. Sources say the waiver will only apply to government departments like the Department of Defence, Railways and Space. Ashmit is standing by with the details. Ashmit, so just to be clear, there's no waiver for PSUs and certainly no waivers for private players. What has been cleared by Cabinet?
Well, just the term spectrum waiver, it sparks a lot of interest. But again, that's an important clarification that you gave, that this is not for PSUs, this is not for private players. This waiver that has come from the cabinet, what sources tell us, is strictly and strictly for only government departments. Bear in mind, departments such as the likes of Defence, Space, INB, Railway are allocated spectrum on an administrative basis for their operations, for their communication requirements. The spectrum is allocated by the DOT and therefore, as a result, they're required to pay the spectrum dues in question. Now, these dues date back to early 2000s and because of non-payment had swelled on account of interest, on account of penalty components compounding over the very many years, swelled to north of 6 lakh crore rupees. And that is the question that was put before the cabinet. One government department having to pay the other. The wisdom was seen by the cabinet that given that this is a situation where the left hand appears to be paying the right, the wisdom was seen by the cabinet to grant a waiver. This waiver, again, to clarify, is meant for these government departments for their spectrum dues on account of their interest and penalty components. Now we're given to understand that after this relaxation, they'll only be required to pay a minimal interest burden as well as the principal component. That is the main charge that has now been approved by the cabinet. But again, to reiterate, this is purely and purely for government departments, the likes of Defence, Space, Railways and INB, not for PSUs and definitely not for private players.
All right, Ashwin, many thanks. Now, Finance Minister Nirmala Sitharaman met with the heads of public sector banks today. The FM urged bankers to lend more and step up credit momentum. Government wants PSU banks to report higher credit growth this fiscal compared to the last year. The nudge from government to lend more comes after the RBI asked all banks to ensure 50 basis point rate cuts are passed on to consumers. Well, the 12,500 crore rupee IPO of HDB Financial Services has been oversubscribed on final day of bidding. As of 4 p.m, the HDFC Bank subsidiary issue was subscribed by more than 15 times. The retail portion was also fully subscribed with a bidding of 1.3 times. The portion reserved for qualified institutional buyers led the demand with a subscription of 51 times, while the portion of non-institutional investors was subscribed nearly 10 times. Fintech unicorn Pine Labs is gearing up to go public. The company has filed papers with SEBI for a 2,600 crore rupee IPO, offering a valuation of $6 billion. Existing investors like PayPal, MasterCard and Peak 15 will sell shares in the IPO. Former civil servant Amitabh Kant has joined Fairfax Financial Holdings as a senior advisor. Kant, who recently was India's G20 Sherpa, will play a key role in the company's investment strategy. Fairfax CEO Prem Vatsa said Kant has outstanding experience in many of the key areas that India intends to grow in the coming years. Tata Power is planning to expand electricity distribution across Maharashtra. The company has sought licenses across key growth regions, including parts of Mumbai, Pune and Nasik. This comes days after Torrent Power received initial approval for distribution in Maharashtra. Vivek joins us now to tell us more. Vivek.
Well, a couple of days earlier, we had highlighted about how you could see the entire landscape of the power sector as well as power supply in Maharashtra change. We told you about how Torrent Power was looking to get a parallel license as far as distribution of power in Maharashtra was concerned. Well, hot on the heels of that, Tata Power too is looking to enter the parallel electricity distribution sector in Maharashtra. They've applied to MERC, which is the Maharashtra Electricity Regulatory Commission, for operating parallel electricity distribution in 10 areas. What does this mean both for power producers, power companies as well as customers? Well, for power companies, it's quite simple. It opens up a new stream of revenue, while for customers it opens up competition, indicating that you could see more choices when it comes to who you buy power from and hopefully also lower tariffs. Now, what is a Tata Power spokesperson telling us? Well, they are saying that the total customer base that the company currently has is at close to 12.8 million across Mumbai, Delhi, Odisha as well as Ajmer discoms, and they say that in case they do get these 10 areas of Maharashtra as well, they would be able to cross the 15 million consumer mark. Clearly, a positive development in case this fructifies as far as Tata Power as well as Torrent Power, if it does happen. What do analysts say? Well, analysts say that number one, this particular development is quite a new development as far as the power landscape in India is concerned. In fact, Bernstein says that these companies will have to compete with state discoms. And remember, they will also have to set up their own infrastructure. They will not be able to use the existing infrastructure for which they will have to incur capex. However, remember, power is a regulated sector, and any kind of capex that companies incur where there is an equity portion of 30% and 70% is debt. On the 30% equity portion, they will receive an assured return in the range of 15.5% to 16%, which indicates, again, a fixed income stream as far as power companies are concerned. Remember, companies will also need to tie up new contracts for receiving supply of power, either from their own arms or from other arms that are active as far as states are concerned. However, remember, given the high increase as far as renewable energy production is concerned, power companies now are able to source power at much lower costs.
Vivek, many thanks for joining us. And with that, it is time for us to wrap up this edition of Business 360. Do stay tuned to CNBC-TV18. We've got plenty more coming up right after this short break. We're back in a moment.